So I actually play in a very narrow box within consumer more broadly. The consumer market broadly, I think, is doing very well. The economy is certainly driving growth. But I play in the lower middle market of branded consumer products. The lower middle market of branded consumer products is very much dominated by young entrepreneurial brands that have come into the market with a positioning that is different than the larger brands. Brings growth, brings innovation, brings excitement to the consumer. And so what I'm looking for in our businesses are founder entrepreneurs who have gotten to a proof of concept with their brand, with their product, and are looking for a partner to help grow that business, that brand in a more professional way so that the larger consumer products companies would find that interesting to acquire at some point down the line. So typically those businesses are in the $20, $30 million sales range. They've gotten to a great base of loyal consumer advocates, but they need to expand that base, and they need to think about building a more of a fundamental organization around them. So there are very few barriers to entry in branded consumer products. If somebody has an idea, oftentimes they can make that into a reality. The barrier really is survival, getting to the right business model, getting to a brand that consumers really truly are passionate about. That's a bit of the magic that the entrepreneur brings. I can't create that. What I can do is recognize when that magic has been created, grab a business when it's past that proof of concept stage, and help bring resources and skill sets in the toolbox to help it survive the next phase of growth, where the founder entrepreneur really looks to build a bigger business with a lot of great talent around him or her. No, we really support the entrepreneur. This is about taking great ideas that are the genius of the entrepreneur and helping really take them out to a broader consumer set. So it isn't about buying an orphan brand for us. That's not our investment philosophy. It's to bring the consumer something new and special that the entrepreneur has created, because he or she is really the genius in this whole equation. I think that there can be too much capital at an early stage as well, and you see that a lot in the beverage space. A lot of the ready-to-drink beverages that were created were flooded with capital after Vitamin Water sold, and a couple other very high-profile successes, which I was fortunate to be involved with. A lot of capital flew into that category, and there were a lot of losses. So having too much money too early can actually be a problem as well. You want to be really thoughtful with how you deploy capital and how you deploy resources, and the way you bring in people. And I think that's where VMG can help, and where we try to spend our time with our portfolio companies, really setting forth a good strategy for growth. The time to exit is a little bit more art than science, but I like to say you hear the drum roll before it's actually time. What I find is when we invest in businesses, often they're on folks' radar screens, but they haven't really kind of hit it in the wallet of the big CPG company. Oftentimes, by the time we're 3 or 4 years into our investment period, we've taken shelf space from a larger CPG company. We've been on the radar screen. Our consumers are talking about our brand. These CPG companies see us and want to have a bit of that growth, and so they covet the brand for their own portfolio at that point. And so we get the inbound calls. It'll be emails, calls, let's get together at this trade show. Could you introduce us to your portfolio company? We know that we've then piqued the interest. So you get a sense, not just from scale and size, but from inbound interest from strategics that we've gotten there. I wouldn't be here if there weren't entrepreneurs. I'm completely grateful and in awe of entrepreneurs. The fact that they can take an idea out of their head and turn it into a reality is truly amazing. And I think the best partnerships that we've had recognize that VMG and the people we work with from a professionalized management perspective bring a skill set that's complementary to the entrepreneur. And so if there's an alignment with those objectives, that the sum of the parts are better than the individual, then we have a very good investment model ahead of us. It is really about how you treat people, and this is a small business environment. It's about working well together, and we make that a hallmark of what we do at VMG. We founded our fund based on the references, recommendations, and referrals of the people we'd worked with when we were all at the Shansby Group at TSG Consumer Partners. That was the philosophy on which we founded our fund. It's the philosophy with which we're going to continue to run our business. I think the personal reference and that recommendation is really important in business today. And I think we're committed to that. So it's important from when you're building a brand, and it's important when you're building a fund and making great investments. It is a real bonus when there's a woman entrepreneur involved. And interestingly, a lot of our first fund businesses were husband-wife teams, which I find fascinating. So I've had the fortune to work with a number of incredibly talented female entrepreneurs, but also a ton of female managers. And I'm very optimistic that from an investment perspective, we're going to have more females sitting in the decision seats as well.